Is artificial intelligence about to change the way we invest in the future? Imagine a world where your money doesn't just grow, but also helps fight climate change, improve society, and promote ethical business practices. That's exactly what's happening right now, thanks to AI-powered sustainable finance. In this video, we're diving deep into how AI is reshaping ESG investing. That's environmental, social, and governance investing. We'll explore how AI tools are analyzing companies faster than ever, spotting greenwashing, predicting climate risks, and giving investors in the US, UK, and Canada powerful insights before anyone else. At the end of this video, you will know exactly why AI-powered sustainable finance is becoming one of the most profitable and impactful investment trends of this decade. Section 1. The Rise of ESG Investing. First, let's understand what ESG really is. ESG stands for Environmental, Social, and Governance. It's a way of measuring how responsible a company is. For example, a company that reduces carbon emissions, treats its workers fairly, and follows strong ethical practices will usually rank higher on ESG scores. Over the past decade, ESG has gone from niche to mainstream. In fact, global ESG assets under management are expected to exceed $50 trillion by 2025, making up more than one-third of total assets worldwide. That means trillions of dollars are flowing into companies that prioritize sustainability. Section 2. Where AI comes in. Traditional ESG analysis is slow, expensive, and sometimes unreliable. Companies release hundreds of pages of sustainability reports, and it takes analysts weeks or even months to study them. Worse, some companies exaggerate their sustainability efforts. This is called greenwashing. This is where artificial intelligence steps in. AI can process massive amounts of data in seconds. Instead of just relying on what companies publish, AI tools can scan thousands of news articles, satellite images, financial reports, and even social media posts to detect whether a company's ESG claims are real or fake. For example, if an oil company claims it's cutting emissions, AI can cross-check satellite data to see if pollution levels around their factories are actually going down. That level of verification was impossible just a few years ago. Section 3. Why 2025 is the turning point. So why is 2025 such an important year for AI and ESG investing? Number 1. Regulations. The US, UK, and Canada are introducing stricter rules that require companies to disclose climate risks and sustainability metrics. Number 2. Technology. With the rise of advanced AI models, including natural language processing and machine learning, ESG data analysis has become faster and more accurate than ever. And number 3, demand. Young investors, especially millennials and Gen Z, are driving the demand for responsible investing. In the US alone, surveys show that over 80% of millennial investors want their money aligned with their values. That means more pressure on financial institutions to adopt AI tools that make sustainable finance transparent and profitable. Section 4. How AI is transforming ESG. Now that we know why AI matters, let's break it down into the 3 parts of ESG: environmental, social, and governance. Each of these is being reshaped by artificial intelligence in ways that were unimaginable just a few years ago. Environmental E. When we think about sustainability, the environment is the first thing that comes to mind. AI is giving investors the power to measure environmental performance with real-time accuracy. For example, AI can process satellite imagery to detect deforestation, track pollution levels in oceans, or measure methane leaks from oil pipelines. This means investors no longer have to trust corporate press releases. They can actually see if a company is damaging the planet. In Canada, for instance, AI-powered climate models are being used to evaluate the carbon footprint of mining companies. In the US, AI is helping predict the financial risks of hurricanes and wildfires by analyzing decades of weather data. And in the UK, AI-driven platforms are assessing which companies are truly aligned with the government's net zero by 2050 targets. So when an investor asks, "Is this company really sustainable?" AI provides hard evidence instead of greenwashed promises. Social, S. Next, the social aspect of ESG. This is about how companies treat their employees, customers, and communities. Traditionally, measuring social responsibility was difficult. How do you track workplace safety, diversity, or labor rights at scale? AI is solving this problem. For example, AI-driven natural language processing can scan millions of employee reviews on websites like Glassdoor to detect red flags about workplace culture. It can also monitor global news reports for signs of labor violations in supply chains, like child labor or unsafe working conditions. One real-world case. In the UK, investors are using AI tools to identify fashion companies linked to unethical labor practices. In Canada, AI helps pension funds evaluate companies' diversity and inclusion efforts before deciding to invest. In short, AI gives investors a clearer picture of whether a company is truly respecting human rights and social responsibility or just talking about it. Governance, G. Finally, governance, the G, in ESG. This focuses on how companies are managed, their leadership, transparency, corruption risks, and shareholder rights. Here, AI can be a game changer. It can analyze corporate filings, board meeting transcripts, and even executive interviews to detect inconsistencies or patterns of fraud. For instance, if a company claims to have independent board members, but AI finds financial ties linking them to executives, that's a red flag. In the US, AI-driven tools are being used to spot insider trading patterns. In Canada, investors are applying AI to monitor governance scandals in the energy and real estate sectors. And in the UK, AI models can flag companies with poor transparency by scanning regulatory filings. This makes governance analysis faster, more transparent, and less prone to human bias. Investors now have a powerful lens to ensure companies are being run ethically and effectively. Section 5. Real-world examples of AI in ESG investing. Let's bring this down to reality with some examples. BlackRock, the world's largest asset manager, has invested heavily in AI tools to integrate ESG data into its investment strategies. They're using AI to analyze everything from climate risks to supply chain ethics. In Canada, the Ontario Teachers' Pension Plan is using AI models to evaluate sustainable investments in renewable energy. In the UK, fintech startups like Arabesque S-Ray are using machine learning to score companies based on ESG performance. These aren't just experiments. They're billion-dollar investment strategies already being deployed today. Section 6. Benefits of AI-powered ESG investing. Now let's talk about the benefits of combining artificial intelligence with ESG investing. Why is this such a big deal for the future of finance? 1. Smarter risk management. One of the biggest advantages is risk management. Companies that ignore environmental, social, or governance issues often face scandals, fines, or lawsuits. AI helps investors spot these risks earlier. For example, if a company's factories are located in flood-prone areas, AI climate models can flag that as a financial risk before disaster strikes. Similarly, if AI detects ongoing lawsuits about labor exploitation, investors can reconsider before putting in money. 2. Profitability with purpose. Contrary to the myth that sustainable investing reduces returns, AI is proving that profitability and purpose can go hand in hand. AI helps investors find companies that are not only ethical, but also financially strong. For instance, renewable energy firms with solid ESG scores are often more innovative and future-proof. With AI, investors can separate genuinely profitable green companies from those that are just greenwashing. Transparency at scale. Traditionally, investors had to rely on self-reported corporate data, which is often biased or incomplete. AI can scan millions of documents, news reports, social media posts, and government filings to create a 360-degree view of a company. This makes investing decisions more transparent and evidence-based. Faster decision-making. In finance, speed is everything. AI reduces weeks of human research into real-time insights. This helps asset managers in New York, Toronto, or London act faster than competitors who are still reading annual reports. Section 7. Risks and challenges of AI in ESG. But like any powerful tool, AI also has challenges and risks that we must acknowledge. 1. Bias in AI models. AI is only as good as the data it's trained on. If the training data is biased, the results will also be biased. For example, if AI uses incomplete information about social practices in developing countries, it may unfairly score companies lower or higher. 2. Greenwashing 2.0. Ironically, AI could also make greenwashing more sophisticated. Companies may try to manipulate data to appear more sustainable, and some AI systems might not catch it. That's why transparency and third-party audits are essential. 3. Data privacy concerns. AI relies on massive data sets, including employee reviews, social media posts, and supply chain reports. This raises privacy issues. Investors must balance the need for insights with respect for personal and corporate privacy. 4. Over-reliance on technology. Finally, there's the risk of over-relying on machines. AI should assist investors, not replace human judgment. Investors must still apply ethical reasoning, industry knowledge, and critical thinking. Section 8. The future of AI and sustainable finance looking ahead to 2030. So what does the future look like? How will AI continue reshaping ESG investing as we move toward 2030? 1. Hyper-personalized ESG portfolios. By 2030, investors will likely have access to AI-powered personalized portfolios. Imagine logging into your investment app and seeing recommendations tailored to your own values, whether that's climate action, diversity, or governance integrity. 2. Real-time ESG ratings. Today, ESG scores are updated quarterly or annually. By 2030, AI will provide real-time ESG ratings, constantly adjusting as new data emerges, like a company polluting a river or launching a clean energy project. 3. Integration with blockchain. Blockchain and AI will merge to create fully transparent ESG systems. This means every sustainability claim could be verified on the blockchain, reducing greenwashing to zero. 4. Global regulations. Powered by AI, governments in the US, UK, and Canada are already tightening ESG disclosure rules. By 2030, AI will likely be integrated into regulatory systems, automatically flagging non-compliance. 5. Expansion into new asset classes. AI-driven ESG won't be limited to stocks. It will expand into real estate, crypto, and even private equity, ensuring sustainability is embedded across all forms of investing. Section 9. Final thoughts. Why this matters. To wrap this up, here's the big picture. AI is giving investors unprecedented power to separate truth from marketing when it comes to sustainability. It makes ESG investing faster, more transparent, and more profitable. But investors must remain cautious, because AI can also introduce new risks, biases, and privacy challenges. In the end, the future of sustainable finance will be built on a partnership, humans and AI working together. Investors who understand this balance will not only protect their portfolios, but also help shape a more sustainable world. So the next time you hear someone ask, "Is ESG investing really worth it?" Tell them this. With AI, it's not just worth it. It's inevitable. And that is it for today's video on AI-powered sustainable finance. How AI is reshaping ESG investing. Remember, AI isn't just changing how we invest. It's redefining the very meaning of wealth. The future belongs to those who align profit with purpose. The only question is, will you be part of it or left behind? If you found value in this video, make sure to hit the like button, subscribe to Asset Bloom, and turn on the notification bell so you never miss insights on finance, investing, and the future of money. Drop a comment below. Do you think AI will make investing more sustainable, or do you see hidden risks? I'd love to hear your thoughts. Until next time, this is Asset Bloom, helping you grow smarter, invest wiser, and bloom financially.